Hey guys, it's a market update. Bitcoin at 26,000 is absolutely perfectly valued according to a new valuation metric. We're going to see that in this video. This is from Glassnode, what they call coin time analytics. So stripping out a lot of the coins that are either locked away or lost forever, and then showing us some real valuation metrics of the active coins. Very important to see that. I think we're going to compare that to some fundamentals about what is going to push and pull us. We'll look at that, the ETF applications, money supply, and some other metrics we'll look at in this video. I'll leave timestamps below for those sections as well. We'll get to the Bitcoin price first. So 26,000 on-chain analytics shows us is around about fair value for Bitcoin right now in terms of, supply and demand, activity on the network. So we're going to look at that. For right now, you're just seeing a range at this point. It's August, September. We can actually see that Bitcoin doesn't really do much during these months. It's a quiet month in market, so you're not going to see too much. Now we've got huge news events coming up, right? We have the Grayscale SEC decision. This is going to push us in one direction and may actually bring us out of this range. Until then, nothing's going to really be happening because there aren't any players in the market taking big positions. So we don't know what's going to happen with the SEC versus Grayscale lawsuit. If Grayscale wins, we are going to see at least Bitcoin come up towards the top of this range again, around this 30 level, right? So this would be it right here. If Grayscale lose or it's a bad decision, we certainly will break through this support level to the downside. You can see these areas here are probably support and resistance, right? So you've got 32K as resistance. You're looking at, maybe around 23K for support, maybe a little bit lower, depending on that decision. So that's really important. It is fundamentals that are driving this market. Technicals are out of the window at this point. You can see just a huge consolidation really over the past, few months or so. So it's fundamentals that are going to drive us. If you're a trader though, Bybit deposit bonus, check the link down in the description. You can get up to 30K if you make a deposit and you trade on Bybit. So check the details in the link below. What is going to break us free of this purgatory of just consolidating in this range? It's going to be the next move for BTC. If you're in BTC, if you've been in it for a while, you'll know it doesn't really trade like stocks. It trades very sparsely. So you get these long periods of nothing happening and then suddenly whack, it goes like 50%. So what's going to drive us? ETF applications are one of those things. I don't see them being approved this year. The final deadlines are actually March next year. So 6 or 7 months of toing and froing, maybe some positive news. The deadline in March may see an approval if the SEC hand is forced by the lawsuit. But if it isn't, maybe they appeal it or maybe something else happens. Maybe they delay it even more. I just see this being delayed and being pushed out further and further. So not a massive catalyst in my opinion. But the Grayscale case itself might be a good or bad catalyst. We're yet to see. In terms of August and September, you can see typically bad months for Bitcoin, right? Minus kind of 10, 12% maybe. Nothing really happening, right? So unless something specifically happens in the Grayscale case, you might just see a malaise for the next few months. So just to be aware of that. Also important, this bear market is pretty much the longest and worst we've ever seen in a Bitcoin history. So 500 days for right now. Now we've just broken out of this range. Bitcoin is trying to, carry on with its price growth with the growth of the network, but it is one of the longest drawn out bear markets. So congratulations if you're in it. Eventually it will break out in my opinion because the network is growing specifically. What will break us out? Again, ETF applications, don't see that happening until next year. Maybe Grayscale news would be good, but it's not going to break us out to new all-time highs, that's for sure. The other thing is central bank policy changing. Now, this is M2, this is money supply around the world. You can see this is global year-over-year change in M2. So you're looking at, all of the major economies here and this huge dip down. So when M2, when money supply gets flooded into the system, Bitcoin is going to go up in value. And that's what you saw 2019 onwards, a huge impulse. All-time high for Bitcoin. Now, that was way overdone in comparison to what usually happens throughout economic cycles. And so, of course, we got this huge drawdown. So it's no coincidence that you get from, the top of 2020, 2021, a huge drawdown and actually negative M2 supply growth. And that just coincides with a huge drawdown for BTC in a really long bear market. These two are correlated for sure. We're seeing this potential impulse to the upside though. So you're seeing a little bit of easing in China right now. Europe is very weak, and so give it 6 months or so and they might actually start flipping towards saying, look, we're done with rates, we might actually start easing a little bit. This all depends on data, of course, but you're seeing the wheels very slowly turn from, real contraction to a lot of people saying, actually things may be a little bit weak, and so we don't need to contract as much. So I just see this turning. This is a long-term thing though. This could be 6, 12 months more, but we can see the impulse. I think the impulse is important because Bitcoin has impulsed higher from that 15 low. And even though, trading August, September aren't great, you're looking for the winter months and maybe the new year, for some new rhetoric coming out of central banks, and that can flip us again. But again, that's maybe down the line and not for the next few months. Is 26,000 an important price, and why are we consolidating around this level? So I want to introduce this, which is new from Glassnode, what they're calling coin time metrics. Now, what they're trying to do here is strip out any of the coins or supply that are either lost, not going to be used again, right? Like Satoshi's supply or some other supply that's just been lost. The reason is because that was lost so early on in Bitcoin's history that those coins are obviously showing huge profits, but they aren't actual profits because they're not going to be used in the active supply of coins. So what they're trying to do here is strip out all of those coins and perform on-chain metrics on the rest of the active supply. So what we can see here is that due to the tremendous unrealized profits held within lost and inert supply, which offsets the losses held by active investors, we propose a new suite of pricing models, one of which has a long-term mean and median very close to 1. This suggests that it's an ideal candidate for measuring the average investor cost, basis, and market mean reversion. So what we can see here from this, and just a kind of easier explanation here from Will Clemente, essentially, it compares the amount of actively traded supply to the amount of value stored in the network, almost perfectly spending 50% of the time above and below 1. This is the true mean. And so what we can see here, really, if you're an investor, you're looking to maybe buy Bitcoin, you're thinking, is it a good time now? Is 26 a little bit too high? Is it going to pull back? Well, obviously, Bitcoin is a volatile asset. So you've got to think maybe 10, 20% either side of the current price is possible on any given day, depending on a bit of news. However, if you're investing, over years, then investing towards the bottom of price cycles is obviously the better thing. So this is a little bit similar to MVRV, if you've ever seen that, or some of the other metrics which try and show these impulses between overvalued and undervalued. So what we're looking at is coin time AVIV ratio. The blue line right here, you can see the Bitcoin price chart right here in black, and the true market mean price, which is a average in blue right here. Now this blue down here is just showing us impulses towards overbought and oversold. So during the height of bull markets, this blue line is going to go up towards 2, showing overbought levels. Now, not necessarily expensive. Expensive is, relative depending on how long you want to hold the coins for, or, when you think you're going to sell them. Because, relatively expensive down here when Bitcoin was trading at $100 or whatever is very different to what it is now. It's not expensive now. So it's relatively overvalued for short-term price cycles, not long-term valuation metrics. But what we can see during bull markets, we have this huge impulse up where the blue line, the true market deviation or AVIV ratio, impulses up to higher levels around over 1, right? Now as this comes down during bear markets, you see it cross through the mean and down to these lower levels where this green is. So red is overbought, I would say. Green is oversold if you're looking at price cycles. So as an investor, where do you buy? You try and buy the most coins during or underneath 1, and during periods where you're as close to this level as possible. Now, what we can see is during these price cycles, there is a point where Bitcoin comes down and the price is significantly low enough that you just draw in more investors than there are capitulation sellers at that point. So each price cycle has followed this same pattern where you get this big drawdown, and then at some point you just get the reversal and it starts climbing up again. So each and every price cycle, as you can see here. Now this current cycle, we've done exactly the same thing. We had a huge overvaluation or an overbought price coming down through the mean, down through to the support zone, which we've seen in each previous cycle. and then the move up. Now we are currently right at this mean level of 1. So you're showing really that it's not massively it's not overbought, it's not oversold. So 26, it's not cheap in comparison. You're not seeing cheap coins here. It's not 15,000 again. It's certainly not overbought. It's kind of right in the middle. So Bitcoin is not in that capitulation bear market phase anymore. It's certainly not in the bull market phase. You're just right in the middle of that phase. And the market is just saying, we're kind of at mean pricing right now in terms of who's using it, how many active investors there are, and the price level. But we're not in a bull market. We're not in a bear market anymore. Just waiting for those fundamentals, which take much longer to play out, right? ETF applications and central bank policy isn't an overnight thing. That's what's going to drive us either up or down a little bit. But we're seeing the impulse away from tightening more towards looking at growth again. And so that's why I think that the major impulse over the next 2 to 3 years is going to be up towards that overbought level a little bit more than the oversold level. As soon as we get any news in the grayscale case, I will of course make a video on the implications of that. This is the next important move for BTC, and we have to wait to what the judge says because that's going to impact ETFs as well. If you are a trader right now, check out the Bybit deposit bonus. You just make a deposit and trade. They give you a deposit bonus in your trading account. Also, if you want to know about my strategy for the next Bitcoin halving cycle in the next few years, I made a bunch of updates to the Crypto Investor course. They're all free for existing users. So if you haven't watched them you can watch them for free. But I'll link the Crypto Investor course in the description if you want to check it out. 300 videos, updates for free over time as well with all of my research and strategies. I'm James with MyZG. Cheers for watching, and I'll see you in the next one.